Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Thursday, December 11th, and my name is Raleigh White, and I'm coming to you live from a beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be joined by Nate Tucci to cover a range of important topics, including a midday market update and summary as to things that they're seeing in the markets right now. They're also going to talk about why the market may get even more volatile over the next several weeks, discuss if the VIX is going to continue its mid-month spike as it has been doing over the past several months, critical news events that are upcoming that have the potential to move the markets, and how to find the best options for weathering the kind of uncertainty and volatility we're facing. And lastly, Nate is going to introduce a brand new OptionX platform that he has, an exciting platform, and Roger wanted to make sure that he shares that with you today. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, the chat is open to everyone, and we do have some ground rules. Number one, always be kind and positive in your posting. Also, keep to the topic. No political discussions are allowed whatsoever. And also, folks, keep your side conversations to a bare minimum so that the rest of us can focus on the education and information that Roger and Nate are going to be sharing, because they're here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. So, if you were with us this morning at 8 o'clock for Roger's pre-market briefing, you'll note that there were just a couple of catalysts that we needed to be aware of. First of all, on the tech front, Oracle was down 12% coming into the open. Adobe was up a modest 1%. On the fintech front, we noted that PayPal was down 2%. And on the Fed front, we had unemployment claims that would be coming out. And we also this afternoon have a 30-year bond auction. Now, why do we even focus on these catalysts and why are they important to you? Because we're talking about information that is either known or will be known, but is not yet priced into the markets. And from that standpoint, that makes these catalysts volatility flashpoints. And you need to be aware of them as you consider potentially trading into stocks around the sectors represented here. Now, as far as the small cap watch list is concerned, Roger gave us 7 tickers to consider today: AXIL, BTTC, PETS, ACIU, GLXG, CRBP, and ATOS. And why don't we just go ahead and shift over to my other screen here, and let's take a look at how those small caps have been performing so far today. Now, as I mentioned, there were 7 tickers that were involved here, and I want to start here in the upper left-hand corner with AXIL. Our pre-market target was $15.70. The market opened up about 8.5, and it's been sticking there. It hasn't made any moves here, so I doubt we're going to see any action there. As far as BTTC is concerned, we were looking at $12 as our launch point here. The market opened up here around $9 and has fallen off, and you can see the volumes falling off as well. Nothing here. Now, next to that, we have PETS. PETS, and this is the one hit that we had today. And let me just lower this a little bit. There you go. So our target was $3.35. And this morning on our 4th bar, and each one of these bars, by the way, are 15-minute bars. So an hour after the open of the market, we see the prices came through the 5-cent point. This is where we would have gotten our fill. Unfortunately, it topped out at about $3.46 for about a 3% gain before reversing and come back and hitting our stop here. The way I have been tracking these small caps is I look for a 50% move to target a win and a 15% loss to register a loss on the trade. So once again, it just barely knocked us out, came back into this level, is moving sideways. Unfortunately, no real positive results from this hit in pets. Now, next to it, we have ATOS. Pre-market high was at $1.06. We can see we opened up here at about 97 cents. It's moved lower, no action here. Lower left-hand corner, ACIU, pre-market, we're looking at $4.50, opened up here about $3.20 and has not made a move at all in this direction. Same for the one next to it, GLXG, pre-market high, $5.32. That's our target. Not even close, folks. Opened up around $3.56 and has been moving lower. And lastly, CRBP, our target was $14.60. It opened here at about $11.40 and has been moving steadily lower. So seven that were on our watch list, we had one tick, and the way I am tracking things here, that's a losing trade. So coming back to these small caps, just want to remind everybody that Roger's selection process is not only based on price action, but primarily he's focused on extreme volume pre-market. And when I say extreme, I'm talking about pre-market volume that's 100 times more than what its normal volume is. We're talking about volume that's at, 1-year highs. That's the kind of thing we want to look at. And he also does remind us that these small caps are their own animal. That volume is driven by retail traders like us. There is no institutional money coming into these small caps whatsoever. He also suggests that when we take a look at these opportunities, only consider trading them during market hours. And if you don't have a fill by around 2 p.m. Eastern time, take the trade off. It's not worth the risk. And speaking of risk, if you get into any of these trades, please don't hold them overnight. You're going to wake up to a nasty surprise in most cases if you do. So once again, that's our recap on small caps. Now, as far as our large cap stocks are concerned, let me see here. Let me bring this up here. Uh, Well, as far as our small caps are concerned, we note that there were 25 stocks, excuse me, small caps. I'm a little disoriented. My screens are changing in front of me. There were for the large caps, there were 25 stocks that were issued. There were 10 on the short watch list and there were 15 on the long watch list. And so from that standpoint, a lot of activity here, mostly on the long side. Now, for those of you that were with us, you know that Rogers pre-market watch list, these are legitimate tickers that are setting up. They're not ready yet for prime time, but they certainly are setting up to be potential trades. So these are the trades that what Roger will be watching, the tickers that he'll be watching throughout the day. And if any of these tickers meet his criteria, more than likely, that is going to be issued as a trade alert that goes into his trading pit or any of his other premium services. But once again, pretty active with 25 stocks being selected here, tickers. And if you were with us this morning, you know that he brings each one up. He brings the chart up for each one and gives very quick commentary as to what he's looking for. He'll say things like, I really like this short, but I'm going to like it a lot more if it breaks below the 200 moving average. That's great advice associated with that particular ticker and something that we recommend you all take note of. As far as Roger's closing pre-market comments are concerned, we did note that the futures markets they were mixed to lower coming into the open, with the NQ leading things down. The big drag on the market was Oracle. As we saw, they were down 11% coming into the open, and they were dragging tech lower. But his question was, is this an overreaction? And one of the ways that we're going to determine that is we've got Avgo issuing their earnings today. It'll be interesting to see if the the AI moves are starting to basically crumble a little bit, because there's concern about over-evaluation there, but we'll see how the Avgo response is. He also notes have not moved off their lows, and despite the FOMC data that came out yesterday, and I'm not talking about, the fact that we got a 0.25% rate cut. Everybody knew that was going to happen. There was other information that came out, and the bonds did not move off of their lows. We also see that the SPY and the QQQ remain stalled. And Roger's concern is this: they've been stalled at this position high in their range. And he said, they've been poised to either break up or break down. But the longer that they stay there, he's concerned that there's going to be a move in them to the downside. Okay. Why? Because he questions this: beyond the earnings coming out today, Avgo, what else remains as a way of key catalysts that could potentially move the markets higher this year? There was a discussion as to whether or not the Supreme Court ruling on tariffs might have something to do with that. Very, very, very difficult to say here. But once again, his question is valid. We're stuck here. We have not been able to make new highs. Are we poised to move lower? So his advice today: be extra, extra cautious, okay? Keep an eye on the SPY and bonds to give you a signal as to what might be happening. And obviously, we're going to be focused on Avgo earnings to see how they are going to react. In other words, was the negative response to Oracle, is that going to fall over into Avgo, or is Avgo, which is primarily chips, are they going to be somewhat indifferent? So I think that's sage advice. Anyway, we've got a great group of people joining us here today, and we have a terrific agenda. Roger's going to give us a midday update, and a summary. He's going to be joined by Nate Tucci, and they're going to talk about why the market may be getting a little bit more volatile as we move into the end of the year. Will the VIX continue its mid-month spikes? What critical news events are coming up that could move the markets? And how do you actually find the best options for weathering uncertainty? And with that, Nate is going to introduce his brand new OptionX platform that's designed to help us all as traders deal with the issues that we've got confronting us as traders. Now, once again, folks, this is, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with his presentation. Also, remember that the chat is open to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic, no political discussions at all, and keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger and Nate are going to be sharing, because they're here to give us an edge in the market and to help us all become much more confident in our trade activities. And with that, let's say hi to the team. Hey, Matt. Hey, Roger. How you doing, buddy?
Doing great. How are you doing today?
I'm doing just super, my friend. Having a good time here in Austin, Texas. As I said, the weather's absolutely beautiful. Things are going good in the White family. Let me tell you that. No complaints
That's
whatsoever.
that's what I want to hear. I like when things are going good in the White family. That's fantastic. That's what I want to hear.
Now,
All
Roger,
right.
it's interesting. We were looking at the small caps, and of the 7 tickers that you gave us, we did get a hit with pets, but it was one of those, my gosh, it gave us a fill, went up about 3%, and then fell off about 18% and kind of knocked us out. Of the 7 that you gave today, pets, PETS, was the only one that reacted that way.
But
So,
I'm looking at pets right now. It's at the day high. It's at the high of the day.
yeah, but it fell off. I mean, so
Oh,
the way I track this, it went up to $3.46. It came all the way down to $2.75, which is a 18% loss on the
got it.
fill. So that's the way. Now, if people hung into it and didn't have a 15% stop loss, well, we're back up to about where the entry is.
Yeah, and it's volume is picking up on it right now. But anyways, it's all good. It's all good. FCX 20 people are doing good. I'm overall folks are doing well, and we do have Natester coming in just a few minutes.
That's right.
When I met Nate, he was just getting ready to have his first kid.
That's like
Just
8
getting
kids
ready
ago
to
or
have
something.
and now it's like I can't keep track. Is it 5 or 6 now?
No,
I really
no,
don't know.
I think he has 7
More?
children. I
Oh
think
no, I'm behind. I'm behind
no,
the ball.
I believe so, and
We'll ask him.
I
We'll
will
ask him to
ask him, but I
confirm.
think it's 6 girls and 1 boy. I mean, it's
Yeah,
something like that. So he's
7 kids.
considerably outmatched in his family.
Yeah, I'm gonna tell you something. I don't know what I would do. I would. That's a lot of kids. That's a lot of college. That's a lot of work for Nate. That's all I'm going to say. But God bless him. I mean, kids are the best. Kids are the best thing you can. And as everybody knows, I'm leaving shortly. Nate is going to be coming here after this class. I'm going to be leaving, and I am making an exception to me not working like a rascal. I don't want to get beaten up by my family. I'm going to my daughter's graduation in
I
Tampa,
know.
so I'm going to be getting out of here and I'm going to be getting out of here and a little while, and I don't want to do two things poorly. I'd rather do one thing well. So I will be here next week, and I'll be giving you guys updates. But it's one of those rare times that my daughter is graduating. I can't. I'm not going to miss that.
No,
That ain't
that's
happening.
exciting for you, Roger.
Yeah. Yeah. Last week, my little daughter, my youngest daughter, had bat mitzvah, and this Friday, my oldest daughter, is graduating, and then next month, my son, end of next month or beginning of next month, my son is going to Australia. It's gonna be crazy, right? He's not gonna be here for 4 years. All right, let's thank you. I appreciate it. I can't wait for her to get acceptance letters from all of these law schools. I'm uh I'm curious where they're going to accept her, and I'm more curious where she's going to go. She's applied like to 15 law schools.
Well, yeah, well, you
Uh,
said she killed the LSATs
she
and she's
killed
got a
it. She
great
killed it.
GPA. Yeah.
She has a 3.83 or 3.85 GPA, and she got the 90th percentile. No, 96%. Was it 96th percentile on the LSAT, which is just amazing. I mean, that's crazy good. So she's like, if she got better by 1 point, she'd be able to apply to Harvard. So I don't think she's applying to Harvard, but she's applying to she's not applying to Harvard and Yale, but she's applying to every school below that.
All right.
So that would be fantastic. That would be fantastic. I would love that. I would love that. That would make me very happy. Make me very, 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 very happy. All right, let's talk about the market. We've been talking about me for a little too long now. So if you look at the SPY, you will see that we're still hovering. The SPY actually looks really good on a daily basis. And remember what I told you this morning, that it could just come shake out earnings, one stock. Don't get premature. Don't throw the baby out with the bath water. Okay. Don't do that. As far as price action, we're still trying to get above our upper level here. I'm going to add one more level here. And one more level here. Should have added this morning, actually. I mean, last night. I should have added it last night. I don't know why I didn't, but there's another level I'll add here, and we'll see how that goes. But so far, we're not looking bad. We're not looking bad at all. And if you look right here, you could see that if you take the tech out of the equation, you've got a pretty darn good market here.
Mm-hmm.
Financials, folks, they're up over 1%. That's huge. That's huge. That's really, really huge. Okay. So I'm not hating anything right now. I like what I am seeing. The bond market is above all of this. We're above the 200-day moving average. For me, that's huge. And when I say huge, I mean that's huge. We're above the 200-day moving average. The next step is 100. I'm taking it one step at a time. But here's what I'm going to tell you. Being here, Richie says, looking good, especially since bonds. Yes. Being here is much better than being here, because this is the 200-day line. This is that
Right.
neckline right
That
here.
was your big concern, Roger. Your big
It's a major
concern.
concern.
Which way are we going to go here? Yep.
It's a major concern. It's a huge concern. So this is good and this is bad. All right. Great, Peanuts. Glad to hear that. Glad to hear that. So again, folks, just be mindful. Just be very mindful of that. Let me give you some stocks that I'm liking right now. But I'm going to be honest with you. I like what I'm seeing. Here's another thing that I'm liking, and everybody who I want you guys to consider this. The IWM has the most sensitivity to interest rates, right? And look what it's doing. That's fantastic. You can't fool the Russell 2000.
2000.
You
right.
can't. Matt, can you hook me up?
Yeah.
Thank you, sir. You can't fool the Russell 2000. It's just not possible. It's too big. You could fool GameStop, but you can't fool the index, So this is very, very positive. And folks, one thing about me, I say it how it is. I'm not going to tell you it's okay. I'm going to tell you how, if it's awful, I'm going to tell you it's awful. If it's fantastic, I'm going to tell you it's fantastic. I'm not going to bullshit you. Because you know why? I have no vested interest in it. It doesn't help me. It doesn't help me in any shape, way, or form. See, I can make money on the way up and I can make money on the way down. And it's about as easy both ways for me. I don't asking me which way should we get to the airport. I don't own the road. I have no vested interest in this. I just say it how it is. What I don't like is the fact that mega caps are doing this. Now, statistically, in theory, over time, when the Russell 2000 starts to outperform, we enter a really nice, big, fat bull market. Okay, statistically, it's happened almost every recession we've ever had. The Russell 2000 is the first thing to get out of it to the upside. Now, I believe these mega caps are in this position right now because some investors have concerns about valuations on technology. And those concerns came back to light those concerns came back to light today with Oracle earnings. Well, I'm going to tell you something. Oracle is a network company. Oracle is not a chip company. Yes, I know they store data it's all interconnected. It's all technology. And obviously, if chips don't get bigger, Oracle's not going to get bigger. It's all connected. I understand that. I understand that AI is the future. I get all that. But I'm going to tell you something, okay? It's too late to put the AI genie back into the bottle. It's way too late for it. And I think that AVGO, which comes out tonight, AVGO, as Raleigh mentioned, I think that's going to be a much better indication of how the whole AI thing is doing. So I think mags are this is more concerns about AI. But look at XLF, look at financials. Folks, look at financials. This is amazing. Mm-hmm. Look at Russell 2000. This is fantastic. This is really good for the market. This is really, really good for the market. I don't know how else to tell you that. So, and internals, let's just quickly look at internals. People are expecting me to say something nasty, I think, but I don't have anything bad to say.
No, you're just calling them like you see them. And the other thing that was interesting you said this morning, Roger, which I took note of, the small caps can also be a prognosticator of where the large caps may go. So to the extent that, the Russell 2000 is starting to move higher and it's interest sensitive, is that going to be enough of a catalyst potentially to help the large caps move higher?
Oh, absolutely. Look, here's what I think. I think the market right now is extremely stable. I think this whole technology thing, the truth is technology probably is getting a little overvalued. But technology will always be overvalued, and technology will always stay overvalued because that's where the premium is. Number one. Number two, the more technologically advanced we are, technology is going to overpower everything else in the market. Think about it, right? Mm-hmm. Ask yourself this question. What did we use technology for 50 years ago, and what do we use technology for right now?
Right.
About 50% more things, right? Well, in 20 years, doctors will be dependent on robots. It'll be like, oh, my doctor uses this robot. Your doctor uses this. I charge you more. I'm not going to joke. I'm going to tell you a story. If you think I'm joking with you, let me tell you a funny story. I have a friend, a really good friend. His name is Dr. Barusco. Okay. He does hair implants. For rock stars. He's in like mid-Florida. He's one of the best hair transplant surgeons in the world, Dr. Barusco. Nicest guy in the world. The reason we became friends when we were teenagers, we both love Iron Maiden. Iron Maiden was our favorite band as we were kids. So we have music in common. So and we talk all the time, and he's telling me, he's like, let me tell you something interesting. Now, when I do procedures, people come in and they're asking me, do you have this robot or do you have this robot? Because I got a quote from this doctor who has this robot that can do it better than you because of the, and he's like, what the hell is going on here? People are judging me by how much robots are charging to do. I mean, it's ridiculous, right? But that's just the beginning. This is just the beginning of the iceberg of all of this robotic stuff. So
Right.
it's not going anywhere. And Nvidia is not going anywhere. It's like the internet, but the internet never went anywhere. There was a lot of hanky panky, but then finally it broke through, and it's AI is going to be the future to our lives. So
Sure.
it's not going anywhere. So just because the mega caps are off of the high of the, and I mean, look how spoiled we are. I mean, look at this. I mean, all-time high is right here at 68. We're at 68, 66 and a half, and we're talking about a bearish move. I mean, come on, you
Right.
know? SMH made an all-time high yesterday. So I think if there was that big of a concern, this sell-off in SMH would be bigger. All I'm saying is I'm not seeing anything crazy. The only thing that I'm seeing is the bond market, and the bond market is beautifully
It's starting
bouncing
to
off.
be supportive. Well, I could just give you a little bit of personal background. I have a daughter that works at Oracle, and I have a son that
Mhm.
works at Avco at Broadcom.
Oh,
And
interesting.
the
Interesting.
interesting thing when I talked to them, they said, Dad, what you have to understand about AI is that the biggest fear we have as a company is falling behind. Because if
Right.
you fall behind somebody on AI, you don't catch up. Because
Well,
AI is it's like a quasar. It's moving away from you faster than you can possibly catch up. So the money that these companies are spending is almost defensive. It's out of fear. And as a country, we're doing the same thing. A huge fear of falling behind other countries. And it's driving all that. So I just thought that was interesting perspective.
that's a great perspective, and I just want to add before Nate, you don't have to mute your mic, folks. Nate Tucci's here. He's the publisher of Wealth
Hey,
Press.
Nate.
He's a great, fantastic
Hello,
trader.
Raleigh.
He's the guy that sets
Hello,
all the list
everybody.
pricing.
Uh, I always get blamed for pricing.
That's right.
No, but I love you. I love this conversation. Roger, you're saying all the things that across the whole spectrum that I keep hammering
There was
over and
there
over
was
again.
there another little thing. Me and Adam Looper. Adam Looper is our CPA. He's our numbers guy here at the company. I mean, obviously Raleigh and Nate know them. We were talking yesterday, and we were talking about how I think it's Meta. Meta got caught behind the AI, and they're now turning to Google to for their and don't quote me. I might be off of this, but I know a major company like one mega cap stock is now starting to rely on another mega cap stock for its AI. It's not going anywhere, folks. This is the reality that we live in, and again, the fact that small caps are breaking out is absolutely fantastic. Now, let me just give you some intraday momentum levels and. Look at VIX. VIX is now back to 15. There's no fear in this market,
It's
okay?
insane.
I think Apple will use Gemini, something like that. I think you're right, Adrian. I think you're right about that.
They're all cross invested.
They're all cross right now, right? They're all right.
Yeah.
And if that's the case, it's in huge demand. It's in huge demand. Um, Look at VIX. VIX is we just broke our low on the VIX, okay? Bond market is not filling in this gap. It kind of went up to the gap a little bit, and it's now coming back up. We're above fair value on the SPY. We're outside of our value area, which is very bullish, by the way. ADD, just a few minutes now. I always tell you guys, it's very important when you see ADD or volume coming in or actions coming in, not at 9:30, but at 1 o'clock in the afternoon or 12:30, because the markets get quiet. So if you see a pickup in activity at that time, it's not random. It's not like 9:30 or 3:30. So look at what happened with ADD right here. See how we went from 990 to over 1,000? Like this is a ascending triangle, by the way. It's breaking up to the upside, and it's happening not in the morning, but well into the day. That's a very bullish sign. The fact that Vold has been going straight up today, I mean literally straight up today, it's a very bullish sign. So I'm not really seeing, all I'm seeing really, and I told you this morning that I think this is an overreaction. Don't put Oracle in the AI thing. Remember, I told you this. We talked about it just 4 hours ago. And I told you that to me, if I look at this right now, it doesn't look like it looked this morning. To me, it just looks like the SPY just coming off the 8-day EMA, bouncing and coming right back up into its fair value area. So I'm not really seeing anything unusual, weird, scary. I'm just not seeing it. I'm not seeing it. I'm seeing just a normal trading action. And again, I'd be the first one to tell you that there's something off. Now, let me quickly give you my watch list stocks. It'll only take about 5 minutes, and we'll get Nate get right into and boy, oh boy, wait till you guys hear what Nate has to say. It's going to be great. I'll get into that in just a minute. Let me just finish this. It'll only take me a minute to do this. So my short list has bearish on T-Mobile. I'm still bearish on TTD. And I'm still bearish on right here. ARM. As long as it doesn't go back above the 200, as long as it stays here, it's got good volume that's moving up, which is very good. And I'm bullish on Johnson & Johnson. By the way, Johnson & Johnson is right at the VWAP right now. You got an entry right here. If it comes right above this area, you got an entry in Johnson & Johnson right here. Look at volume. It's coming up, all-time high. That's an entry right there on Johnson & Johnson. If you want to take it, you've got till about 210, you got about 80 cents, 90 cents there. But that is an entry. I like Alcoa quite a lot. I do like Alcoa. I like, and by the way, again, I'm going to remind you of something. Retailers had an amazing, earnings came out twice as good as expected. And most retailers are doing fantastic. Look at TJ Maxx, look at Macy's. They're top on my list. That usually leads to a nice end of year. Wells Fargo, I gave you guys this one earlier today. It's still in play. DHR looks good. Let me give you some that I might have missed earlier. Okay. TRN, that's a very nice bullish stock, maybe for a day trade. Uber is still on the chopping block. I would wait for it to break this low. And FedEx, again, FedEx is making a new, I think this is an all-time high. FedEx, no, it's not an all-time high, but it is a swing high. Now, folks, remember, it's holiday season right now. FedEx shippers, that's almost as good as retailers. That's like CRM being really bullish and me talking about how a lot of companies use it for email, get kind of gauge what people are doing. And there was one more that I really liked, and that was UPS. I really like UPS here. And I think we're long UPS in one of our programs. It's got a good gap fill here. It's got a nice gap fill. Okay, now let's talk a little bit about Mr. Tucci here. Mr. Nate, I had the number of kids wrong today. I said 5, 6. They all corrected me and said 7.
It's the Magnificent 7.
I don't know how you do it, and I'm not even going to ask. I just don't know how you do it. You deserve an award. That's all I'm going to say. Now, folks. Now, Nate's got something new on the horizon. It's going to be, you guys are going to love this. And Raleigh, when I say you guys are going to love this, they're going to love this. He created a way to measure stocks that most people have never seen before. It's of option combinations, which is something I should start doing, to find the one that best fits the specific stock and automatically generates it. So far on his trades, he's had a 90% win rate. We like anything that starts with 9. 9 is very good. And what I really love about this is the level of transparency that you've gone through, Nate. Nate has set up an app where people can see his real live account and every trade that he takes in real time. That is beautiful. I'm really big, as you know, I'm really big on transparency. I post all my alerts in real time. I don't believe in not having a trade track. I believe in people seeing why should they. The question people ask is, why should I follow you? Why should I listen to you? The answer to that is my results. If the results are not good, then why would you follow someone in the first place, right? And I'm talking about long-term results, not 3-day results. That's not how it works. So Nate is very focused on this. To be honest with you, I'm going to be looking at this program to possibly take some stuff from it and incorporate it into my AI programs. And by the way, thanks to AI, we're able to come up with programs like this. That's another thing. So it's a fantastic program. I cannot wait to check it out. And the fact that you could see Nate's account. Now, Nate, let me ask you a question. Did you open up like a special account for this, or did you
It's
just plug
a
into?
totally new dedicated account that only takes these specific trades so that people can follow every trade, what I paid, how many contracts I paid. It even spits out if I have a working limit order, it even spits that out into the dashboard so they know, hey, does he have a take profit set? Is he trying to get out? All of that in real time.
Yes. Yes.
So
Right.
it's pretty cool.
And real quick question. Can I ask a few questions, or is this
Yeah,
all like
absolutely.
Okay.
Absolutely.
How many different type of option, like what type of option things does it look for?
Okay, so most people who know me know that I pretty much exclusively trade debit spreads when I want to try to get into a position that is either defensive, just below price, or somewhat directional. So that what it does is it looks through the combination of where a stock might move. It actually measures the distance of the stock. Now, if you guys run one of my sessions recently, you might already know a little bit about this, but I'm going to have a masterclass today that's going to go super deep. But
okay.
What I found, so here's Roger, my light bulb moment, or what I think is really kind of the new way to evaluate whether an income style trade, like the way that I trade, works. You have a trade that 2 weeks till expiration, where you have a 2% cushion below the price, right? And if it stays above that price, you win. Well, how do you know if that's a good trade? I hear people say things like, oh, the IV, or but everything's relative in the market. So what I did is I said, well, if I have 2 weeks till expiration, what if I go back and measure chunks of 2 weeks on this stock? And I actually put together a real measurement of how much does this stock move over a typical 2-week span. So if I'm trading AVGO and I've got a 2% cushion on the stock with an expiration date that's 2 weeks out, and then I go measure the last 52-week chunks, and AVGO moves 8% on average over 2 weeks, 2% cushion doesn't do a whole lot for me. I'm not really feeling great about having a 2% cushion on that trade. So then what the algorithm does, it says, all right, well, let me go measure every stock. Let me go measure every expiration date, and then see which ones actually are good. Where do I have a 3% cushion on a stock that only typically moves 2%? Well, now you've got yourself a good trade, especially when you add in that you're going to have a bullish bias on that trade. Now you've got a bias plus an outsized cushion plus an attractive ROI. And when you mash all those things together, that's where I get really excited. That's why I call them high conviction trades. Roger, I went even a step above the account, by the way. I built a little robot that automatically takes the trades in the live account. So when OptionX fires an alert, I don't even review it myself. I just say, if it's good enough for OptionX, it's good enough for me, and my little bot automatically executes the trade in real money on the account, because these are really those high conviction trades that I'm confident in. So a lot of cool, crazy stuff, and I think definitely we got to talk once I finish a couple more things on the other AI stuff. I think you'll like a couple of the option measurement stuff that
Yes,
that you can apply.
that's what I was alluding to a minute ago. I'm really excited to learn more about this. I really am. What time are you having the class today?
It's at 2:30, so right after we wrap up here, pretty much a little break, grab some water, and then I'm going to be jumping in and really diving deep. If you guys are nerds like me, you will love the 2:30 class.
Oh, we have a lot of nerds here, and we have a lot of folks who are excited about this. I was telling folks about this earlier today, and I always love when you I like specifically when you and Graham come out with stuff, because I saw you guys from the ground. I've been around here for a while, so I've seen both Graham and Nate kind of grow as traders, and it's fantastic to see them mature so well. And you guys are gonna love this. Nate is doing fantastic. Nate is a long-term thinking. He's not looking to just come out with something for now. This is something he can implement later on. He can improve it. He can add more modules to it. But I'm looking forward to sitting down with you and maybe talking about it, and maybe getting some ideas so I can actually maybe implement this for myself. That's the beauty of the pit, folks. With the pub, folks, we could share good ideas together. And,
great community. Yep.
Yeah, that's the word. All right, so folks,
and I will say, Roger, that I owe a lot of my kind of core original thinking to you, because it wasn't that long ago, 10 years ago, that I was just like anyone else in the room trying to figure this thing out, and listening to people say things like buy low and sell high, and all these adages that tend to get traders really on the wrong side of the market. So it was really Roger who was the first real trader what would that have been, about 8 years ago, where we got connected and I could really see behind the scenes what you were doing, how you were building the system. And now I am incredibly mechanical in my approach. I mean, almost everything I do is incredibly systematic, rules based. I don't even make hardly any decisions, and a lot of that was from kind of learning how you structured those systems and trading ideas from way back 8 years ago. So I owe a lot of what I've built over the last decade to you.
I appreciate that. Appreciate that very, very much. And again, folks, you're gonna love this. You're gonna. I'm gonna watch about 45 minutes of it here, and then I have to hit the road. But this is exciting. Please, please, please don't go anywhere. Please pay attention. You will get a lot of value out of this. And then Nate will come back and answer any questions that you may have. So you guys are gonna love this. You're in for a treat. Go ahead, Nate, please.
Well, thanks. Real quick, I just want to recap. I'm probably beating a dead horse because of what Roger's already talking about. But I think the market's quite healthy right now. It's really just this ugly tech bubble that's making it look less out. I mean, the SPY did just flip zero. It zeroed out for a second. If you guys look at the SPY right now, it's trying to get above this little consolidation. But if you just compare that to the RSP, you'll get a very clear idea of how healthy this market actually is underneath the surface here. Look at the RSP breaking out relative to the SPY. So it's very obvious that the sectors are contributing. We have an underlying market that's actually getting healthy. And by the way, gold's participating in the upside again. So we're getting a lot of breadth across this market. I agree with Roger. If TLT kicks into gear here, we're going to see this thing really get going. We're going to see, the market rip. I think we'll see easily all-time highs in a real Santa Claus rally if TLT gets going. And because right now, technology doesn't even have to do anything special. It doesn't have to drag the rest of the market up like it was in April and May and June. It just needs to participate a little bit, and we're going to see the market go. By the way, little hint here. XLI is moving. XLI is breaking up. XLI has been grabbing technology by the hand and pulling it up together. So I think that's a front run of what we're seeing in technology right now as well. I see all good things right now. RSP is the equal weighted. And what we're seeing that breakout. Okay, I won't spend a whole much time on this dashboard. We'll talk about that at 2:30. To what I actually want to talk to you about today, which is what I've been obsessed with and building for the last little while. Of course, let me start with the legal talk because you guys know the drill. I'm not gonna give you any sunshine and rainbows until we talk about the hardcore facts, which is that so far we are looking at OptionX based on real trades. Obviously, I'm not going to give you just a theoretical back test. These are all based on since I set the algo live.